Assalamu alaikum and good morning. Today I will present how I invest $1 million internationally using a strategic and diversified portfolio approach. My name is Muhammad Daniel Mutakin. I am currently pursuing a degree in investment management and I have a strong interest in learning about the stock market and global financial investments. My overall strategy is to diversify across different countries, industries, and asset classes to balance risk and return. This is known as a strategic asset allocation approach. First country is Switzerland. I choose Switzerland, a developed market with low risk and high stability. I will invest using a Swiss blue-chip equity ETF which gives exposure to strong financial companies. Switzerland contributes around 9% of GDP from the financial services sector. The country has a stable political environment, strong regulations, and highly liquid markets, making it ideal for short-term growth and portfolio stability. Next is Turkey. The second country is Turkey, an upper-middle-income economy experiencing strong growth in property development and tourism. I will invest through a real estate investment fund, Emlak Konut Geo, one of the largest REITs in Turkey. Tourism revenue recorded over $61 billion recently, so real estate linked to tourism has strong return potential. Third country is Sierra Leone. The third country is Sierra Leone, a frontier market where high-risk investments can provide high returns, especially in agriculture. I will invest in FDI in cocoa agribusiness because cocoa is one of the country's major export commodities, valued around $21 million annually. The sector has room for productivity improvement and value-added processing. Now for money allocation. For Switzerland, the money allocation is $400,000. The suitable investment instrument to be invest is Exchange Trade Fund, which is ETF. ETF hold the top 20 blue chips company in Swiss market. So because of that it's suitable for short-term investment even though the return might be slower but it associated with low risk. Now, for Turkey is USD 300,000. Real Estate Investment Trust is the suitable instrument to be trade in Turkey. Real estate is suitable for long-term investment. Lastly, for Sierra Leone also USD 300,000 because the country have a good potential growth in future especially in commodity. So, because of that foreign direct investment in commodity is good investment for long-term investment. Now let's see the analysis of risk for three countries. For Switzerland, the main risk is currency risk and market volatility. The strategy to overcome is by using currency hedging such as forward contracts. After that, for Turkey is currency devaluation. Strategy to overcome is prefer real estate funds by using USD. Lastly, the commodity price fluctuation. The strategy is use commodity futures. Now, expected return. So the expected return for Switzerland is 6% to 8% due to strong performance of Swiss equity. For Turkey is 10% to 12%. This driven by rental yield and supported with property value appreciation. Lastly, for Sierra Leone is 15% to 20%. This high return driven by high risk in frontier market and have a strong growth in commodity market. Yearly portfolio expected return is $99,000 to $128,000. Now, let's focus on potential challenge. For Switzerland is exposed to CHF currency appreciation may reduce USD-based return. For Turkey is high inflation and Turkish lira depreciation can erode return for foreign investor. Lastly, for Sierra Leone is high exposure to commodity price volatility and governance infrastructure risk. For conclusion, this investment plan is success to diversify the USD 1 million across different economic levels which is the income of the company. For Switzerland is develop, Turkey is emerged and Sierra Leone is frontier. This strategy ensuring balanced mix of stability portfolio and try to maximize the profit while reducing the risk. With proper risk mitigation such as currency hedging, the portfolio is expected to give high return in near future while minimizing the global risk that exists in the market. That's all for me, thank you.